Good afternoon and good evening from wherever you may be tuning into this important event, TEDxGlasgow's Conversations Worth Having on the Future of the Economy. I'm Gurjit Singlali, the founder of TEDxGlasgow, and it's my pleasure to welcome you to this evening's event. We've got an incredible panel of speakers, and we'll be hearing from them on how best to address the deep economic challenges and opportunities that COVID has created. As of next week, this talk will be available to watch and share from our website. And you'll also find our previous event, The Future of Society, there as well. So thank you for joining tonight's conversation. And thanks to our speakers for responding so generously with their time. Let me hand you over to Clare English to get the conversation started. Over to you, Clare.
Thanks very much, Gurjit. Hello, yes, we're back in the room with a Zoom and a big beast of a conversation worth having for this second virtual TEDxGlasgow gathering. Last time, as Gurjit was just saying there, we kicked around the notion of a post-pandemic future society and what that might look like. Very entertaining it was too. But as we're all acutely aware, the agony continues. COVID-19 isn't done with us in the UK or around the world, so we have to think differently, we have to act differently, and in general be more agile. So where is that most important right now? Well, it's the economy, because without that functioning properly, we can't hope to climb out of this dip and into the sunny uplands of recovery whenever that happens. We have some expert help to guide us through this fresh hell, but this is about you being part of this conversation too. We want you to participate, so please use the Q&A function at the bottom of the screen for questions to our panelists a little later, and the chat function for your general comments as we canter through the points of this webinar. And just to get us thinking about a few things to consider. Pre-COVID, back in the day, much talk about our future economy zoning in on climate challenges, opportunities as well as well-being to help to boost the economy, create jobs, even help us build a more equitable society. And then bang, along comes this global health crisis. We're left reeling. Unemployment is soaring, businesses face ruin, some are hanging on grimly in the hope this passes soon, but we've seen so many behemoths go down, as well as the small to medium-sized operations. What's going to replace them? Will there be new jobs that are of value and of purpose for us, especially our young people who are just leaving school or college or uni? Does education itself have to change to fit the new post-COVID reality? Well, does this pandemic usher in the end of globalization? So many questions. We thought Brexit brought a few challenges. This is a whole new ballgame. Does the capitalist model have anything left in its tank, or do we tack in a different direction? How risky, how rewarding could that be? Or are there lessons from history, wise words and observations from economists past to draw comfort and inspiration from? Lots to get involved in as well. We'd like you to tweet if you want to, go on social media. It's hashtag TEDxGlasgow, CWH. Now, we need some people to help us navigate our way out of this mess. Can I ask some more questions before we begin? We've got 3 people in mind to help us answer the questions. You're going to meet our panel now. Stellar piece of casting, as Gurjit said, for our TEDx conversation worth having on the future economy. I'd like you to briefly introduce yourselves, if you will, and give us a clue about where you stand on the issues. And we're going to start with you, Linda.
Hi, I'm Linda Yueh. I'm an economist and I'm an author. My latest book is The Great Economist, How Their Ideas Can Help Us Today. And that's where, that's the clue as to where the angle that I would take, which is having looked at 250 years of economic history, there's huge lessons. There's a lot that we can take away from what society, as well as economists and others, have grappled with in the past after a crisis, and during times in which it seems the economic consensus has broken down, and we want to re-examine what kind of economy would best suit us. And I think learning from the past and knowing they got through it is one of the things that I hope to bring out in the conversation today.
Hallelujah. Maybe some optimism. Who knows? Who knows? Right. Thank you so much for that, Linda. Mark, introduce yourself, please.
Certainly. So my name is Mark Blyth. I'm a political economist. What does that mean? It means that as well as trying to look at the world through the lens of economics, as kind of a map that helps you understand the territory, I like to think about economics as a thing in the world. And here's what I mean by this. Economics is above all a language of power. Whoever gets to control the terms of debate in economics, to define what is free, what is efficient, what is optimal, what we should do in policy, given what economic theory says, that's a political action as much as an economic one. And we tend to forget that. So the writing that I've done over the years tends to focus on the political power of economic ideas. I've also written about economic policy in a book called Austerity, The History of a Dangerous Idea. And most recently in a book that just came out, which you should all go get, called Angrynomics, which I may have one or two things to say about today.
Shameless plugging. Well done.
Shameless.
We're getting in early. Thank you very much, Mark. Andrew, over to you, last but not least.
Thanks, Claire. Andrew Wilson. I made the mistake of buying Mark's book when it was before it became the paperback. So I've got the library version. It was 50 quid on Amazon. And it made Mark an absolute outrage. I've been an economist and I've been a civil servant, a politician. I've worked for a bank as an economist. So all the popular things that makes me very popular indeed, all the good jobs. I'm then working for Charlotte Street Partners, and we advise companies in the intersection between markets, private business and public policy, really. And I've got a particular interest locally here in Scotland on the progress of the country, having helped provide a report to the First Minister on what Scotland might need to do to navigate back into the European Union and towards independence.
We shall see. We shall see. Lots to discuss. Thank you very much, Andrew. Now, coronavirus is a real wrecking ball. I think we can probably agree with that. How bad is bad? Well, we could try a scale of 1 to 10 because we've had a recent comparison from the 2008 financial crisis as a marker. But today we hear Bank of England saying 9.5 shrinkage instead of 14. Is that good news? Are we deluding ourselves? But it looks like we're still facing a long climb out of whatever happens next. So if I maybe start with you, Linda, and say how bad do you think things are, because you've got this overview from history. So
it's bad, and I think probably the other characteristic I would add is it's hugely uncertain, because pandemics are just that. It is a function of whether or not we can find a vaccine, we can live with the virus. So in the sweep of history, there are about just a handful of what's known as, severe macroeconomic events where real GDP, so that's average income, taking into account inflation, shrinks by more than 10%. And one of those incidents was the Spanish flu of 1918. So the scale of what we're seeing today is comparable to what we saw a century ago, but with vast amounts of differences. But the thing I would stress is that we've learned a lot since 1918 in terms of pandemics, in terms of control, in terms of advances in medicine. And the degree of lockdown that you've seen around the world, I think, is a function of how active policy has been. So thinking about the economy, we know that economic policy can make a difference when it comes to recessions, supporting people. And in this instance, where the government action of lockdown to counteract the pandemic, government action really matters. So I hope we can think not just about economic policies during the pandemic, but also during the recovery. And I hope that's something that we can get to, because I think particularly it could make a particular difference, because lockdowns are unlike financial crises, and pandemics are unlike other more usual economic recessions.
Yeah, interesting that last point, Andrew, that Linda made about, let's think about it when things normalize a bit, when you can say normal. What is normal now? But how bad do you think things are? And I won't ask you to do a scale of 1 to 10, but if you want to, you can.
Well, it's really bad. Obviously, the OECD earlier in the summer forecasting that this year we would lose an economy the size of Japan and Germany put together. Unfortunately for us here in the UK, we're at the worst end of it. We were already teetering with recession as we entered COVID. We've got Brexit and the single market departure coming in January, so it's difficult. And unlike normal conventional downturns or even really deep recessions, we're losing capacity possibly permanently. So it's not just about government intervening on life support, which the UK has done very effectively at the start of this crisis. It's not even about pumping demand into the system, which you would conventionally in a system looked to see at a difficult time for the government to use fiscal policy or monetary policy. We were already quite extended since the global financial crisis. So what we're looking at now is the need for government to invest, not just to get us back on our feet, but to recover to a completely different place from where we were when we went into the crisis, because as we've discussed, or you discussed in the last TEDx, the world was already unsustainable. Climate emergency was already, meaning that the way we were working was non-sustainable. Inequalities by gender, geography, and crucially by generation made the world unsustainable and gave us the political discord that elected Trump, that voted for Brexit, that gave us populist strongmen all across Europe and elsewhere in Latin America. So there are many reasons to think that this is a special one, and not in a good way. I'm really surprised by the Bank of England's forecast today. I've got the highest regard for that institution and the quality of people working there, but the idea that we'll have the economy at the end of 2021 at the same size as it was at the end of 2019, for me is for the birds. I don't think we can bounce back.
Mark, you're sitting from the distance of the USA. Would you like to first of all comment on what those Bank of England figures were like today? Did they shock you as well or surprise you with the?
Well, given that all Bank of England reports come with what are called error bars, so here's your trend and then we could do this, and eventually they become so wide they become meaningless. I try not to pay attention to these things because they're always wrong. Essentially,
always wrong. How harsh!
Yeah, IMF reports are always wrong over the longer run. We just never do account of the errors. I mean, that's just the fact of it. No, I want to focus on something else. When you ask the question, how bad is it? Let's ask this question: for whom? Jeff Bezos is having a fabulous downturn, right? The digital economy is having an incredible boost because of the downturn. And when we talk about GDP falling, GDP is an average, but nobody lives on an average. So the 80% of wage earners in the OECD that haven't really seen sustained income growth for over a decade, that's where it matters. It's not the people who are actually asset rich, who have got federal supports in the forms of central bank support for their assets and all the rest of it. So let's not say that there's this one average and we're all affected by equally. That's simply not true. The second thing is, and this is the positive case that I can make out of this, is we have a very interesting problem coming out of this. Because remember at the start of this, it was all a question of, are we in a V-shaped recovery? Are we in a W-shaped recovery? You know, some kind of alphabet soup. What all of this is basically saying is like, here's where we are, and we've had a shock. And as we come back, it's just a question of the shape of the comeback, right? So we call this in statistics mean reversion, right? It's just called the stochastic relationship. I think that's totally flawed. I think what's happened is we've broken the trend. And we're beginning to figure this out, because when's the next time you're going to take a flight to Australia? When's the next time you're getting on a cruise ship? If you've got any shares in Massage Envy, I would short them right now because that business is not coming back. There's a huge amount of disruption going to happen in what we had, this thing called the economy. And we're just beginning to figure this out. But it's also an opportunity for us to rethink our economy, because that capital has not been destroyed. Those figures of a third down and 10% down belie something very important. All that capital is where we left it in March when everyone got sent home. It has not been blown up in a war. So it's a question of how do you take it and transform it into what we need going forward, because we're no longer on that path. We're not going back to business as usual. That's unsustainable, as Andrew just said, it always was. What COVID has actually done is to force us to confront that unsustainable moment and actually think forward. And in that regard, I think there's a lot of positive things that we could do.
It also sounds, Mark, as if you're saying it's impossible to forecast anything in this crisis.
Of course it is. It's ridiculous. Nobody knows
So what do we do? What are
anything.
economists for then?
Well, that's an open question I have raised many times. And in fact, a large part of my work through about 10 years ago was basically saying you can't predict anything, and then I got Trump 6 months out. So I don't know. You'd make it not like one.
Okay, I was saying in the introduction about, has capitalism got anything left in its tank? I'm just wondering, is it the end of capitalism? I know it looks like the end of globalization. Maybe, Linda, you would disagree with that? Are we seeing the end of globalization? Are we even seeing nearly the end of capitalism as we know it?
We are going to see a different form, I think, of capitalization, globalization, and capitalism. I think I just coined a new word.
That's good. I like it.
I think both of those things are going to look very different. And I think, the context is that it was already the case before COVID, that there was already a discontent with the status quo, with the the market economy as it's currently constituted. There was already a backlash against globalization. And so what COVID has done, I think, is just, added to this, this sense that we need to have a different model that suits the 21st century. So we've seen this through history as well. There are periods in which the system which worked previously just doesn't work because the context has changed, society has changed. So for instance, the market system of Adam Smith, of course, with a huge, he has a huge relationship to Glasgow. That system, which worked during the Industrial Revolution, which he observed, it didn't really work for even the latter part of the 19th century. So after the Panic of 1873, the Great Depression of the 19th century, which is known as the Long Depression, that was when unemployment appeared in the dictionary for the first time. And that coincided with a massive shift of trade unionism, of a push in the late Victorian period to help the deserving poor, which ultimately ended up creating a welfare state by really the early 20th century and certainly in the post-war period. So the welfare state capitalism that we live with today is a function of all the changes that came because of crises, of discontent, of a number of things. And I think we are again in that time where we are looking again at what reforms had to be done to change the system so that it is more inclusive, more sustainable, and just suits what we need in the 21st century. So we have gone through this before, but the outcome will take time, and I think it will look different than what we have seen in the 20th century. It just always reminds me of what Mark Twain said: history doesn't repeat itself, but it often rhymes. And I think we are living in such a period.
Yeah, Andrew, are we looking at maybe stakeholder capitalism becoming the thing if it's going to be the new iteration?
Well, I think one thing that definitely is in retreat is globalization, and that poses a risk for small open economies like Scotland and others around the world, but it also poses a difficult risk for the developing world, because while Mark was very correct to point out that the industrialized world, most people living here didn't enjoy increases in their after-tax income for the last decade or even more. But globalization did pull a lot of people out of poverty in the less developed world. And I'm very concerned now as countries retreat behind barriers. Linda's got a book about economists, starting with Adam Smith. And one of his big observations was when you have barriers between countries and you try to do everything yourself, you build walls, then the world gets poorer and you get poorer. And that's the big worry for me. One of the structural trends that COVID could bring is that which will hurt the developed world. And as the former governor of the Central Bank of India was arguing in the FT quite recently, what's bad for them will be bad for us. We need to act and enlighten everyone's self-interest in helping the developing world too. Closer to home, I don't think capitalism is dead, because capitalism just means the private sector leads. In Scotland here, we've got 70% of our jobs in the private sector. Most people are employed by it. We get that. But what's definitely going to happen is the government is going to have a bigger role. It has to have a bigger role because it has to help the private sector, the labour force, through the crisis that we face just now. And crucially, optimistically, we have the opportunity to do that because, like never before, money is literally free for governments and many companies to borrow. So if we do that on a grand scale, while it's still available, an open question as to how long that might be available, some say for a long time, others worry, then we can invest that in the sort of changes that we need to see, endowing the third sector, fixing the green recovery that we all know we need. It's dead easy to say it. And one of the biggest things that bothers me about governments everywhere is the biggest and most important force in public policy is what we did yesterday. We tend to iterate and we make a noise about things mattering, whether it's the wellbeing economy or the climate emergency, but we're not acting on it. And so we now need to take this crisis opportunity to act on a grand scale on the inequalities, on climate, on gender. Childcare should be invested in on a grand scale in the United Kingdom. One of the most important things that this crisis has thrown up, and people now realise the pain of it. So there's lots to be discussed.
So there's a huge reset button to be pressed here. Mark, let's try and be optimistic. Is it possible to create a more sustainable and resilient kind of economy that can tackle all the things Andrew's been talking about, inequality, climate growth, and provide the bandwidth and agility to avoid the past errors, or is that just la land, wishful thinking?
No, it's actually much easier than people think. Well, I'll give you an example of this. So, well, I was just talking to you a minute ago about things that are not coming back, right? So, you know, getting a massage from randomly assigned massage people in a closed room. That's done, right? That's done. You know what else?
Some people might be grateful about that, yeah.
Oh, exactly. But there's also commercial real estate, because one of the biggest sectors in many economies is commercial real estate, office space. And that might not be coming back. Now, here's a very simple thing. 30% of carbon emissions come from buildings, because we don't build them very well. We don't build them up to the code that we need to. And to do that, you need to train a lot of people in things like HVAC, electricians, all the stuff that you need to make that happen. So you've got unemployed labour, and you're going to have this thing called commercial real estate. Now, if you walked around London or even Glasgow, some of those buildings are quite nice. And it turns out that government stopped building housing in 1980, basically. And that's why housing inequality and access to wealth building through families, through access to housing, has become a scarce good throughout the rich world. Well, how about we take that free money, and I can define what we mean by that and what Andrew means by that, and we basically take those real estate assets at a bargain price. You convert them all into very nice apartments, and you make them carbon neutral. And you just do that until you get rid of 30% of your carbon emissions. At the same time, by doing so, the state is creating assets which it can then give to its citizens, which gives them a stake in a capitalist economy. And everybody moves forward together. It's buildings, jobs, and skills. It's dead simple. It doesn't have to be super complex.
Linda, go green. That's basically what Mark's saying. Is it as simple as that? It's a panacea.
And I think it's a big part of what should have already been done, and hopefully will be done, because one of the real sources of dissatisfaction of our system is around the environment. And why can't we do things in a more sustainable way? So because we have now had this massive economic shock, all fiscal spending should be geared at long-term growth. And a key part of that is protecting the environment, use the funds we're going to spend anyways, insulate buildings, promote investment into green technology. You see this being done in some countries. For instance, both Germany and France have a cash for clunkers program. So you trade in your more polluting car, the government will subsidize you to do that. Germany is toying with putting in a charging station at every petrol station. So you can change the infrastructure to make it green. It'll be different for every country, but there's no reason why, with such low interest rates that we currently have, and such a need to reorient the economy, and a need to invest so that what is spent garners future returns, there's just no reason not to make sure everything that we spend is consistent, aligned with a greener and more, and a more inclusive, economy, a system. It can be done, and I think this is an opportunity, to do it.
Let me ask you briefly, Andrew, are there any downsides to the green economy and the green agenda?
No, not really, because the biggest downside is not doing it, and that's a pretty existential downside. So there will be, like everything else in life, there'll be better and cleverer ways to go about it. So I'll give you for instance, which applies again to Scotland. We are home to 37% of the UK's natural assets, however you measure them, despite only 8% of the population. We've got the opportunity and are doing wonderful work in renewable energy, but we haven't had the wherewithal to get the technology to take advantage of the opportunity. So we've got the wind, but we don't have the tech. The Danes got ahead of us on that one. And so Britain overall has a track record of being good at innovation, but bad at commercialization and bad at the advantages. So I'd like to see the government participating in equity stakes in the new climate program that must come, for example, in hydrogen energy, however we're going to get there and use it. We should be investing in that. The taxpayer could take a stake as long as it's run commercially, but in the public interest. And the advantage of this is we've got a demographic time bomb too, which means that we don't have the tax revenues long term to pay for an ever increasing older generation and for the proper education and support for our coming generation. So we need to think differently, and that's one example of how I would think differently. So if you invest in the right way, on the correct terms, and have it held in the public interest, good. If you invest in the wrong things for the wrong reasons and don't run them commercially, bad. And that's the lesson of history.
It's about political will as well, isn't it? You know, because every financial decision made is intrinsically political. By the way, thank you for joining us, everyone. If you want to follow us on social media and you want to tweet about this or send out any messages at all, it is hashtag TEDxGlasgow, CWH. So let's get back to that kind of political point, balancing the health of the nation, the world population versus economic security. That's quite an equation for any government to grapple with. And you economists have to work at that intersection of political agenda and persuasions and the economic options for creating a strong economy. That's not easy to align sometimes. So let me ask you, Mark, I think, how much of a factor is the government and political ideology of the day during a crisis like this? I mean, how important is it? That shapes the whole argument, doesn't it?
It does, but that also presumes that they have one. And I think there's a kind of like dearth of ideology moment. And if you go back to, let's say, the end of World War II, it was a deeply ideological time. And you had a clear choice between basically communism as a quasi-viable economic model, right, that just defeated the Nazis on the Eastern Front, and American capitalism, and people were forced to choose. When the wheels came off that model in the 1970s and the inflationary crisis of the period, there was another choice to be made. And what we did is we took the Reagans and Thatchers and the economic ideas that attached to that, made our central banks independent, made the fight for inflation the thing, and off we went. This time around, it's like, bleh. Right? What's the crusade? What's the vision? Where is it? Like, let's give the central banks carte blanche to pump even more money into asset prices and hope it trickles down and we'll feel a wee bit better in the morning. That's not a vision. That's definitely not an ideology. So I think if anything, in this moment, you know, it's a lack rather than a thing. But behind that, the politics is something that's gone along with the past 30 years. Which is, and I hate to sound like Dominic Cummings for a moment, and there's a sentence I never thought I would say, but I'm going to say it, right? Governments have completely forgotten what they can do. And in part because of the ideology of the 1980s and 1990s, which says, don't get involved in the economy, don't touch that, you'll break it, you don't know what you're doing. Markets are good, stop it, right? And because of that, they became terrified of doing anything. Everything was hived off the technocratic institutions. And as a consequence, when basically the twin shocks of globalization, deindustrialization, all this stuff happens, basically our parliamentarians are sitting around tweeting about how paedophiles are bad people. Well, you know, no shit, Sherlock, for that one. But that's not really going to get you to the next place. So we've got this combination of short-termism and timidity with a kind of lack of big ideas. And that's our block. Now, the thing is, to get past that is an act of courage. It's basically deciding that as a political class, you actually are going to rise to this challenge. And we've been skirting around this for a minute, so let me talk about it. We live in an unprecedented financing environment, right? If you do the sort of what's called the big data analysis on this, as far as we can tell, real interest rates, right, the cost you pay for money, has been falling since the 1300s, with a blip in the 1970s and 1980s, right? There's a trend there. And we're now at zero. Because of the current moment, people want to hold safe assets, that's called government bonds, and they want to get rid of volatile assets that are dependent on cash flows, called shares. So that's why indexes go down, their wealth goes down, and the cost of funding government doesn't just go down, it's negative, which means the global investor community are paying governments for bits of paper. They can then take that cash and invest in whatever they like, on a 10-year basis at a negative real rate. If we don't do this now, we're never going to do it. Never. That's the moment. That's the courage that's needed.
Andrew, what's your analysis of that?
Well, I think 3 cheers for Mark. I'm completely in the same space as him. Now is definitely the moment. If we think about it again, you know, UK, Scotland blew it when it came to the bounty of North Sea oil. We won in the natural lottery and spent it all. Didn't invest it as Norway and other countries have done. We have that opportunity now. From what Mark has described, we could invest that capital in a fund for return for the country, which is seeking out returns in excess of the cost that we're paying for it. That's doable. It's hard work. It's being done in Singapore very successfully in the last 40 years. So we could do that now. But as Mark says, it takes political courage and long-term thinking, which Linda highlighted. And one thing that's in short supply in politics is long-term thinking. Also true in companies who tend to have a very short cycle. Their shareholders tend to hang around only for 6 to 9 months on average. So there is a short-termist problem within the system, definitely. So if we can back those politicians with the courage to ride out the bumps, to do that strange thing, which is to tell you the truth, to tell you what it's going to be like to navigate the storm to come, but to get to the other side is worth it. Now, I'd apply that to the case for getting back into Europe and for Scotland being independent. Others will disagree. But what we need from our politicians now more than ever is the opposite of what we've had in the Brexit campaign, which is we need truth, we need a prospectus, we need experts, and we need, as Mark says, politicians with the courage to do big things.
Gosh, are we being really harsh on our politicians, Linda? You've got the overview of centuries of people working politically and economically together. But if you look at the present government, British government, it's kind of gone against the grain, hasn't it? It's like right-wing ideology becomes state intervention, pragmatism. It looks a bit Keynesian, maybe.
Yeah, I think, to be fair, almost all governments look a bit Keynesian right now because of the pandemic. And if you didn't, you would be, the IMF has this massive tracker of every single country in the world. And, it is the time to support. But I think the kind of, the historic point is there must be some type of saying about politicians. It's just part of the job, for all of us to take a look at what they do and to point out the ways in which, governments need to take a longer term view. And this is why I'm sort of pointing to, it's not the first time and it won't be the last time, that there is a real, I think, need to think long term and strategically. So the net zero target of the government by 2050, is a long-term target. It has an admirable goal. The challenge will be to fill in the details. What does net zero mean? How will you get there? What is the composition of things that need to happen between the public and the private sphere? How much of that is change of behavior? How much of that is in terms of public investment or private investment? There's a huge number of things that still need to be filled in. But having a long-term goal means that if you look around society, all of us as individuals, but also companies, employers, everyone is taking a look at something, different. And the reason I'm kind of stressing this is because oftentimes, change doesn't just come because one sector of society wants it. It comes because a wide swathe of society, policymakers, people at the grassroots, civil society, businesses, we can all see a better future if we can somehow move towards it. And it's the robust exchange of ideas as to how we get there. That's how we form a new consensus. So, but having a long-term goal to become net zero is one that points to the direction of travel. So I would say in that sense, this is something I think is already part of our public discourse. And I really hope we can continue talking about how to get there.
So we're talking about political courage as well, and also thinking differently, trying different things because, it hasn't worked. What's worked in the past patently hasn't worked. So Mark, I'd like you to talk to your idea of a citizens' wealth fund and explain where that would fit in.
All right. So this harkens back a little bit to what we've been talking about, but I'll be more specific. So you may have noticed there's been a few financial crises of late. Basically, there was none, believe it or not, between 1945 and 1975, because you had highly regulated national capital markets. You did not have the global flow of money. You weren't able to pump up the leverage, as they call it, and get yourself into trouble, and interconnected banks and all this sort of stuff. So every time there's a financial crisis, the value of equities, shares, as you call them in the United Kingdom, falls regularly about 30 or 50%. And what we do is we bail these people out. We basically start to put central bank money into the system. We don't make any demands on those things. We essentially put a floor under prices. We're doing it again. And essentially that allows the stock market to recover as the real economy falls off a cliff. Now, why on earth are we all about insuring the fake financial economy and not insuring the people in the real economy? A better way to do this would be to do the following. As I said earlier, The government's cost of capital, its cost of funding, is invert to the private sector. What that means is, usually we pay a premium, they get it cheap. What actually happens in a crisis is we're getting it negative because everybody wants to hold a government bond because nobody wants to hold British Airways stock because you don't know when a plane's going to fly next. At that moment, you could issue 20% of GDP, easy. They would get buyers for it at negative rates. You could buy all those equities and shares that have been dumped, and then you put them into a passive, professionally managed fund miles away from any politician. Over the long run, equities return between 4 and 6%. 4.5% to 5% would be an easy goal to achieve on a fund like that. Many funds have managed this over the long term. If you do that, compound interest over 10 years would give you more money than you could possibly imagine. And what you'd actually do there is create wealth. You're not taxing anyone. You're putting a floor under the economy in a very different way, but you're creating passive asset ownership for the citizens of your country, and the income streams from that is their wealth. That gives them a stake back in the system. So that's a very positive, very easy way that we could do this, because we know there's going to be financial crisis. We know that in the COVID crisis, financial markets are going to go down again. Next time, how about we just don't bail them out with a freebie? We actually take the shares and hold them in public trust. And that means that 10 years down the line, the kids that we're going to have in our country will have better opportunities because we'll be able to finance their training better. We'll be able to look after their healthcare better. We'll be able to build housing for the first time in a generation. And you could do all of that in something that is earned, not taxed. And I think that's very important.
Andrew, a Citizens Wealth Fund, does that appeal to you? Could that fly?
It's effectively what it was effectively what was saying a few moments ago. No, the benefit comes to the citizen and therefore through the politicians. But like I say, it's not pie in the sky what Mark is saying. You know, Singapore, broadly speaking, from an equivalent intervention, 1/3 of their public revenues comes from it, from the income after many years, as Mark says. Not only that, but here in this small corner of the world, one of the things we're actually really good at, we've got a concentration of extraordinarily good asset managers historically in Edinburgh and in Glasgow and in Dundee, where Mark's from, where investment trusts were invented. So we've got people who could do this on behalf of us all. These are the interventions that's needed. Just another small lesson from history. If you get it wrong, you know, just carrying on as we think we are now, okay, you know, is potentially not going to happen. 1924, Argentina was one of the richest countries on earth, 3 times as rich as Japan. It was one of the richest centers of finance and trade and agriculture. Today, Argentina is half as rich as Japan because it didn't make big interventions to diversify, open its economy, and get manufacturing rolling. I look at Argentina in 24, I look at Brexit Britain today, and I worry. So interventions are required. Otherwise, we could get to that sort of outcome.
Linda, does that worry you?
In terms of I was going to say a lot of things worry me. But
are we all becoming Argentina? No, that's
history. I mean, you know, as you were talking about Argentina, I was thinking of Venezuela in the early part of the 20th century, right. Another resource-rich country at the time, you know, nearly as rich as some of the richest countries in Europe. And you can see what happens when the system, you know, just over the course of the 20th century, you know, just didn't work. And we're looking at a tragedy in that country. So I think this comes back to why I think it's important to have a long-term strategic vision for what the economy and society needs to be and to have buy-in. And I think this is something which shouldn't be unfamiliar. That, you know, that in a democracy, we should all be feeding in ideas, having that, discussion. So if you look back through history, when I describe that period of creating the welfare state, that didn't come about because you had some people sitting in the ivory tower talking about it. That came about because, you know, people were engaged. There was public discussions, kind of like this one, that we're having right now about what needs to change. And if it can't change, then is there a viable alternative? So some of the other lessons, of course, and Mark alluded to that, and certainly I'm in this conversation right now about Venezuela and some other countries, is, you know, at one point, there were alternative systems. And even now you hear people talking about socialism or new socialism. And so that's a challenge. as a battle of ideas. Can you reform the capitalist system, or is there an alternative? And over the course of history, we can see numerous instances when the alternatives didn't work, but we can also see when the current system desperately needed reform. So to me, that's the debate we need to be having. And this is the opportune time to have it, because of all of the possibilities of borrowing more cheaply, of Marx's idea around, all of this is possible because we are at, I think, a point in which we need to rethink the consensus. But it can only happen if we have these conversations. Nobody has the answer to it.
Yeah, and somebody has to be listening and respond to those conversations as well. Linda, I want to stay with you for now, and I want to mention the word debt, our attitude to debt. And is debt always a problem? Is it a bad thing? Is it the most sensible way to go? Can we run up debt?
And it depends on the circumstances. So right now, debt levels are high for, I'm just going to say, pretty much all countries in the world. And it's just not, it's not a priority concern. For some emerging economies, debt is absolutely a problem right now. And this is why there's talk about debt moratoriums, and why it is the G20 group of major economies is pushing for, some degree of alleviation of the debt burden. So, but for other countries, for which the kind of the issues of debt, I always want to suggest we have to look at debt not just in terms of the growth rate of the debt, which is the growth rate of the interest rate. So think of that as R, but you have to think about the growth rate of the economy, which is G. So, for instance, if you have a high cost of borrowing, R, and your economy isn't really growing, then your debt level just keeps growing and it becomes, an issue. But if R is as low as it is right now, and G is not great, growth rates are not great, but if you could boost that growth rate, then debt becomes much more manageable if the growth rate of the economy basically causes the level of debt to begin to shrink as a share of output. And traditionally through history, there's been different ways to reduce debt. Inflation is one of them, although probably not advisable but I just think we focus way too much on debt and we don't focus enough on growth, when actually, even in financial markets, it's the measurement of G against R that determines sustainability. And borrowing costs are now so low, and we so need to have better standards of living and a greener economy and more redistribution. I would really like to see us focus on G and not on R.
Well, that takes me to the future generation, what we're leaving them with in terms of burden and challenges. And Mark, I know you hate baby boomers like me.
I do.
Absolutely do.
All of you.
We have landed everyone in hell. It's
Yes.
our fault. What are the solutions then? There's going to be a huge spike in unemployment. All these guys coming out of school, colleges, universities. What solutions are there for them?
Well, let's start with why I hate the boomers. If you go to my Twitter feed, you'll see at MK Blyth. There's a little thing that I posted, and it's wealth by generation. It's American data. But basically, the greatest generation, or the silent generation, is the one who were the parents of the boomers. They basically had about 30 trillion in wealth, and that's after fighting fascism. And then the boomers come along and they accumulate through a high growth period all of the assets. They get bailed out in 2008. They vote themselves tax cut after tax cut. It's all me right the way through. They get bailed at the end. They get bailed again right now. And they've got 66 trillion. Millennials have 6, and they're the most indebted generation around. So they have debts but no corresponding asset. This is an intragenerational put option, and it's deeply unfair, and it's massively damaging for your long-term growth prospects. So the first thing I would do is refinance higher education, because the notion that you're going to spend 10 grand, 20 grand, in the case of where I work, 70 grand a year, right? Because that's going to give you such a difference in your lifetime income. That's no longer true. Particularly in Britain, sending everybody to university into a job market where wages are not growing for 70% of the population, this is null and void. These are also not the skills that you need for a green economy. We need actually technical skills, not let's all do math and we'll all become coders. Coders is actually the job that's likely to be done in by AI faster than any other. but I'm talking about things like HVAC, basically building engineers. How do we build smarter? How do we build more efficiently? So rebooting higher education would be a really easy way to do it. Second way to do this is actually tax things. I'm a big fan of growing assets, but let's face it, corporations in particular pay no tax. I'll give you one example of this that I trot out all the time. In 2011 and 2010 and 2011, I personally paid more tax than General Electric. In which universe is that actually okay? Oh, apparently it's the one we've been living in for 30 years. So that nonsense has to stop. There's some very easy lifts we could do here if we just got on the same page and thought about how ridiculous it is that we're in this position in the first place. So part of it is smoothing asset transfers, making sure that generations actually pay costs as well as get all the benefits. So we're allowed to get massively out of skew. The second one is allowing generations coming forward to grow their assets. If you're delaying everything because you're paying off student loans, if you can't possibly afford the house in a metropolitan area unless you happen to have parents who have got liquid assets to the tune of 200,000 quid, that just breeds cynicism into the system. You will think that the system is rigged because in a way it is. But once you realize that, the solutions are simple. It's dead easy. Build some more houses. It'll be hellish for the people that have got big housing portfolios, but it'll be bloody good for the rest of the economy. So let's just be brave and take those steps.
Andrew, are you nodding in agreement, or are you bemused?
I'm certainly not bemused. No, I'm a fan of what Mark is saying. I think the great dilemma for politicians is how to manage that when the boom generation all votes and too many young
twice as much.
Yeah, and too many young people don't. And we have a very big, not only this economic inequality, we also have a difference of opinion about the future of the United Kingdom, the future of the United Kingdom within Europe, even about which parties to elect. So this is a problem, and it's accentuating all of these trends that Mark is highlighting. Probably alongside education, and Mark, I can report that Scotland still provides higher education for free, although that's under pressure given how the budgets are set up. Along with education and access to childcare as we grow, I think the other big one is the housing market, because you find the average age of a first-time buyer getting higher and higher and higher in the United Kingdom just now. People say that we're a crowded island and we don't have space. The opposite is true. You know, in this corner of it, Scotland, we need our population to grow from 5.5 million, possibly towards 6 and 7 million, ideally by attracting people from their 20s, 30s, and 40s who are talent to come and live here. So they'll need housing. That housing will mean work, and so on. That's the way we need to think of it. And if we don't do these things, then we're just managing ourselves towards continued decline. You know, like the I don't know if it's true or not, but the story that when a frog's in a pot of water as it gets turned up, it doesn't feel it till it's dead. That feels to me like the risk for the polity of the United Kingdom at the present time.
Linda, are you concerned about the future for Gen Z? Because I'm trying to think, has there ever been a more depressing scenario for young people to come out of their educational life, to be on the threshold of picking up a career? Is this as bad as it's been before, or are there lessons from the past? I mean, even just looking back to 2008, is this completely different?
I think I gave that Mark Twain quote earlier, where you always have parallels, but nothing is quite exactly the same. There are, I think, quite a lot of challenges, I'm afraid, for the younger generation, some of which have already been outlined. Housing is a massive one. I think the other big one we haven't touched upon as much is, although I think Mark did with coding, which is automation and the changes, technological change. So even in the pandemic, what we're finding is that the hollowing out of mid-skill jobs, middle-skill jobs. So a lot of that means that some of the higher skill jobs and lower skill jobs during the pandemic, and certainly before, are the areas in which you have more job growth. This is more pronounced in the United States, but you see it in other countries. So if you think about the importance of having a robust middle class and being able to join that middle class, the challenges of technological change are massive. And have we thought enough about how we can adapt it so that the technology helps workers be more productive rather than say, displace or push on wages? And that's exactly what we've already seen. And I think it's being accelerated now during the pandemic. So I'll give you one example. it's pretty evident to me that a lot of us now work from home. So, and this is a big change. So the economic studies show that those who are better able to work from home are those who have higher skills and higher income. So, why can we not make more infrastructure available? Why can't we change the way that business norms are so that more people in the middle of the skill spectrum, as well as across a company, can work more flexibly? It won't work for every industry, it won't work for every company, but that degree of just making sure it doesn't just benefit those who are highly skilled and have more income or more educated, that's the key really to this middle class. And that can be helped by technology rather than just sitting back and saying, oh, well, that's just what happens when you have remote working. No, it doesn't have to be that way. Businesses can invest, companies can make policies, governments can, nudge. These are all ways in which we can just make sure that technology helps. And the companies and the countries that can be productive during social distancing, they're probably going to have an advantage for a while, I would have thought, given that we're probably going to be, unfortunately, living with the virus, at least for some time. Although I no idea when that will, no idea when the end point of that is. But what I'm saying is, it's being more productive, but it's just being more equitable. And I think that's what's going to be key for the middle class and middle income.
Well, we've got COVID, which is a massive challenge, as we know, for the economy, for society, for our psychology, for everything. We've got another one, an energy vampire in the wings, and I have tried not to say the word, but Brexit. How much of a dirty bomb is that amongst all this cheerful stuff, Mark?
Well, as the American in the audience, what's Brexit? All right, no. I mean, given the fact that we have such a set of challenges just now going on with the pandemic, it's almost as if Brexit has become a footnote, but it's not a footnote for Britain and it's not a footnote for the trading partners. Let's go to WTO rules. Has anybody noticed that the WTO has no appellate judges on it now, which means that it can't actually do anything? So you're joining a multilateral institution which basically doesn't work anymore. So that's not a great plan. On its own, there will be costs. The notion that, global Britain and it's going to be fabulous. Well, maybe in some version of the world where the world economy is on a tear and everything's fine, you can maybe spin that one. The one we're actually joining, absolutely not. For me, the whole thing, I could never understand Brexit, to be perfectly honest. I'll just give my 2 cents on it, right? So Britain, qua England, is really basically a financial entrepot that sits off the coast of Europe and basically is a hedge currency between the euro and the dollar. And it makes a ton of money basically playing financial games. That's basically it. So you were never going to join the euro, which means you never had put up with any crap from the Germans about austerity. You had your own currency, which gives you great power, and you got to sit at the table and veto anything you didn't like. So we decided that that was a crappy deal, and then tried to get a better deal than the best deal ever, and have now got Brexit. Wow, what a negotiating hand that is. Remind me never to take that person to Vegas with me.
Okay, Andrew, Brexit, a colossal challenge. Can we say anything good is going to come of this? New thinking, radical thinking?
I think the intent and motivation for it was so poor that I don't see any sign of that yet. I think it was the wrong decision for the wrong reasons that won't solve the problems it's set out to do. A lovely quote from Linda, from Mark Twain. My favourite quote is from J.K. Rowling, a global writer local to here, but her quote, it is our choices, Harry, that determine who we are far more than our abilities. She's speaking to Jean-Paul Sartre, we are our choices. So COVID is not our choice. Our response to it is Brexit has been a choice, not one that's been taken here in Scotland, not one that was agreed in Northern Ireland, but it's a choice that's happening nonetheless. And these choices have consequences. As I was mentioning earlier, the extreme case of Argentina. There's nothing we can now do to reverse Brexit for the United Kingdom. We have to think carefully about our options here for us in Scotland, obviously, without wishing to overly push my clear agenda. But I do think that we're going to see self-harm compounding the very difficult harm of COVID. We still don't know. Months, weeks to go, really, until January. And we still don't know whether we've got a deal on leaving the single market or we don't. If we don't have a deal, the negotiations that then have to happen could be very severe indeed. It should not be underestimated. And who pays the biggest price from Brexit? back to the generation that Mark was talking about, the coming generation that can't travel Europe, that can't be educated across Europe, that can't enjoy the same benefits that many people have enjoyed from the European Union. It's not a perfect institution, there's no question about that. But in a new world order where globalization's gone and we have big poles, whether it's in Asia, possibly in India, in America, obviously, Europe's important if you're going to hold your own in this new world. So being part of it matters, which is why so many small countries wanted to join it.
Linda, what's your take on the smaller nations' position there? I don't want to go down the independence thing because that is a whole other TED talk. Really, it is. It's massive. But, you know, the argument would be that smaller, more agile economies can look after themselves better, and better place to do it.
And as you say, this is a massive topic. I think probably what I would stress is a lot of times we think about, and this is completely normal, evidence is based on what's already happened. I think I would encourage us to think about what the 21st century global economy looks like. You can draw on the evidence of what you've seen and then extrapolate and think about the trends that are changing. And that's part of strategically positioning a country in the global economy. So the example that I would say is a lot of times we hear about trade agreements are important, I think, because they open up markets. But look at the way that trade trends are changing. So, for instance, services trade is growing very quickly. Digitalization of trade is growing very quickly. So, if you were to, used to be the case, you had to buy a physical book, but now you can buy it digitally. So that's an example of how the nature of trade is changing. So all of that just requires, I think, thinking about how positioning optimally in a system in which the WTO it's finding it very hard to open up markets in both services and in digital trade, which is why countries have grouped together to do that. So in this kind of complicated 21st century global economy, it's still the case that we need to have more trade and more globalization, and smaller countries in particular, which don't have their own domestic demand, their own consumers are important, but they also need global markets for scale. How you position in the 21st century global economy, to me, is one of the big questions. So I don't think we spend enough time thinking about. And the other part of that, I would say, is quite a lot of the trade in the areas that I'm describing already happens without trade agreements. And that's both a problem and a opportunity, I guess, if you are plugging into those global markets. So I think those are the kinds of things that I would say in terms of what the UK should look at, post-Brexit in terms of positioning itself optimally.
We're bursting through the time zone just now, so I'm going to ask our attendees, you at home who are watching this, do you feel there are any crumbs of comfort, reasons to be cheerful after what you've heard this evening? Are you optimistic? Are you uncertain and gloomy? We've got all sorts of chat box options for you to stick some questions in the chat box. But meanwhile, Zeb Ahmed is waiting to hear what the responses have been and what's been discussed so far. So Zeb, can I call on you to come up and see what's happening out there? What are people asking about, or what are they observing from the conversation so far tonight? Hi.
Hello. Great conversation so far. We've got a good few questions from our audience. So first question, how does the third sector become a more recognised and valued part of the economy? And would it lend the economy and society more resilience to future economic shocks?
I'm going to put that one to Andrew.
Yeah, really, really important. The man I was talking about earlier, Rajan Raghu, the former central bank governor of India, who wrote a whole book on the third pillar and its importance. Here in Scotland, it's mission critical. I have to say, I'm on the board of a few charities. I work with an awful lot of them. Some of the people leading our charities are miles better than many of the people leading our biggest companies. So there's immense talent and motivation in the third sector. The problem is short-termism again. The funding tends to come on annual budgets. They don't have certainty or security. And there's a lot of different charities and they don't tend to come together as much as they could. So I think that's the big opportunity. Definitely place them mission critical alongside the public and private sector reforms that we know we need, and give them possibly, again, back to our friend, the opportunity from cheap debt. Possibly we endow the third sector with access to capital to allow them to do the things that take a long time. I'll give you one for instance. I've just recently joined up with Systema, which is a charity based in the most hard-pressed communities in Scotland, using the orchestra to try and bring children back into mainstream life. And the guy that helped form that, Richard Holloway, said to me, I don't know if we will be successful for 25 years because it'll be the kids that we have that then have kids and whether they succeed. That's the truth of social transformation. It takes a generation, it takes a long time, and you need to back it for the long term. So that'd be a good example of where endowing charities so they don't have to worry every 2 months about whether they're going to live next year or not. I think they're hugely important, definitely.
Mark, do you want to pick up on anything there?
Just to say that the United States is a very large and very particular third sector around foundations. So if you think about the Ford Foundation, Soros's Open Society Fund, etc., the only danger with these things is they become political footballs. So if they have their endowment, then their politics get questioned, and then their motives get questioned, and it poisons the work that an otherwise critical component of civil society actually is able to do. So I like these things to be broadly distributed and on a smaller scale and much more embedded in their communities, and that way they don't get politicized. You don't want the big mega funds because in a sense they become a political football. You want it broadly distributed, and then they really do help with resilience across a whole series of areas.
Linda, do you want to stick in your tuppence worth on that?
Yeah, I think the importance of civil society, of charities, of just society, civic associations and just people is so incredibly important if we're going to forge a new consensus. And nobody knows their community better than the people who live in them and work in them. And looking at all the economic development and growth models, it never works when it's top down. It has to be devolved. You have to have input from the people who are using the policies, who can reform those policies, revise those policies. So stakeholders are absolutely key in every policy. And I think, this has been hugely neglected. But as Andrew's already said, there are now a number of books actually that look at this area, Rajan's book, which actually I endorse, so I do like that book, as well as a new one by Paul Collier and John Kay, which is around the role of society. And I think this is a conversation, another conversation that you probably need to have, which is how. It's always the how, I think, but certainly the recognition is there. It's important.
You've just given us an idea for another conversation. Thanks, Linda. Zeb, have you got some more questions?
Yeah. So next question came from Donald McRae. He asks, should businesses seek to maximize shareholder value or stakeholder value?
Who wants that one? Andrew?
I'll have a go at that one if you like. I mean, the whole maximizing shareholder value is a peculiarly American ideology, and that one really is an ideology. And it's completely unsustainable in the sense that shareholders are transient. I mean, 40% of American equities are traded by algorithms on a daily basis. So exactly who is the shareholder whose value you're maximizing is an open question. This is basically what economists call rent seeking. You're basically creating a little financial wedge where if you apply the right techniques or leverage, you're able to get above market gains. And there's an awful lot of rents in the economy, and that's part of the problem that's that we're facing in general. It's how do you create a productive and fair version of capitalism rather than a kind of rent-seeking version, which is what we seem to have just now. The distinction between shareholders and stakeholders is a useful one, but it's also kind of limited in the sense that, I have a share in this, and I have a stake in this. There's a bit of a power imbalance in the way that one talks about this. If there is an upside to deglobalization, I think it's here that we see it. Problems tend to arise historically and currently when the notion of the political community, the nation, however it is defined, the electoral community, and the bounds of the economy with which they are buffeted are very, very different scales. When they scale together, when there's a notion of a national economy and national citizenry, in a sense it makes sense, right? Then everyone's a stakeholder, and everyone in the type of capitalism that I favor, one where you have public equity, etc., where we would have shares in digital giants and all the rest of it. If they're going to turn us into robots, I want shares in the robots, right? There are ways, creative ways of thinking through this, but it's to take that distinction between shareholder and stakeholder and kind of collapse it. And that presumes a particular type of politics. And I think that's, if there is an upside to deglobalization, smaller, open countries that aren't making a complete arse of it are the place where you will find that type of thinking.
Andrew, you were going to jump in, so you might as well do it now.
I just taking notes on that policy intervention idea of not making an arse of it from Mark there. That's a good one. We'll put that in every party manifesto next May.
I promise not to make an arse of it.
So Professor McRae is himself, the questioner is himself, a very eminent economist who's contributed hugely to Scotland over the last few decades. I think funny enough, you were saying, Linda, John Kay's book Obliquity is the beginning of the answer for me, which is if you pursue something like profit or shareholder return and that's all you care about, it can tend to be the wrong motive, and therefore it means you ultimately fail. Whereas if you pursue your broader purpose, the best and most sustainable companies care about their employees, don't rip off their customers, care about the environment, are good citizens, pay their taxes and take the right decisions by the broader society. Oh, and the shareholders that invest in them get a good return long term. The best shareholders are in it for the long haul. So, and in Scotland, we've got some very long-term investors that have made, 1% of Amazon is owned by one company in Edinburgh, Baillie Gifford. There's an example. So very much I agree with that. And it's a bit like the GDP debate. Not all GDP growth is good. If you're using it, if you get growth by ripping off the environment, bad. And it's similar with shareholder return. If you borrow to give money to investors because you've got no idea about what to do with the capital to invest for the company, doesn't feel sustainable, but it's happening right now. However, if you give shareholder return because you've built a company over a generation that's sustainable and is able to flex and change, because most companies die sooner rather than later, then that's good. So I think it's a complex question with a complex answer.
Linda, would you like to comment?
Yeah, I would just agree with what's already been said, and just to stress that you think about a good business has to treat its employees well, because for a lot of businesses, their most important asset, are the employees. There's a lot of reasons why good businesses over the longer term, perform. And so kind of labels, what Mark was saying, calling it this thing or that thing, I can completely sympathize with, because I think it was actually Milton Friedman, the great economist, who talked a lot about shareholder value. And, to just trying to change the paradigm, I can completely see that. But quite a lot of the shift we're describing now, I think it's actually the logic of a lot of people who go into business, which is, we're here to make something, that we think, will add to society. And we need to be increasingly explicit about it. So, people want to work for businesses which give them purpose, that are good to their communities and care about the environment. And I think that's the shift that we need to encourage. And it probably does require, rethinking some of these models and paradigms, and that's a good thing. But I would certainly say, a lot of the other thing about the battle of ideas over history is not all ideas come out well or stand the test of time. They have their heyday and then they go. And so, but that's the kind of, churn that I think that we need. So yes, I think we need to rethink, definitions of what makes a good business.
Zeb, have you got another little question we could squidge in?
Yeah, we've got one more from Brian about gaming. Could gamification be used to inform and involve the ways we work, learn and meet, and start to reimagine our future economy and society?
Oh, Andrew, I'm going to ask you because you threw your eyes up there.
I'm just trying to think. So I'm wondering what exactly he's meaning. It won't be game theory. It'll be actually gaming. Sort of playing a part. I mean, I'm not qualified, but the one thing I would observe, one of Scotland's most successful games entrepreneurs, Chris van der Kuyl from Dundee. I don't know if actually.
I went to school with him.
There you go.
Of course you did.
Hi, Chris.
He and I don't know if we won't be up, but he and I were discussing at the start of the crisis because he was worried about his industry and how the criticism that it was not healthy for the kids that were playing it. And I'm sitting in my room and the kids are all in the house across the way. And one thing I observed pretty quickly, I've got one kid that's autistic and the other boy who they just went online. And as a result of which they kept in touch through the COVID shutdown with all of their pals. And so for their mental health and well-being, the existence of online gaming was transformative, actually. And so I think there's an industry to the ones you were mentioning earlier, Mark, who's had a bit of a nice wash through the crisis. Whether I mean, it's a fantastic question. I would have thought yes would be the short answer. The idea that you could cherish your imagination online while playing, I think that's bound to be good for the imagination, the same way as burying yourself in a book would be. I'm just not sure. I would need to know more about what the questioner really means to be able to say something sensible. But there you go.
I don't want to land you with that, Linda, so I might land Mark with it.
Oh, yes,
I'll go the opposite for a change on this one. So I remember reading this a couple of years ago. Some of the largest online, so there's two stories, right? So first one, Iceland, financial crisis, 1000% of GDP in the banks, done, right? All the people who ran the banks, who weren't financial idiots, who were actually techs, went home and played online games. They then figured out that they lived in Iceland and that the servers for online gaming actually take up a lot of heat. So they went to New York and met with some private equity guys and basically shifted a large chunk of the global gaming industry to Iceland and stuck it in the ground. So yes, this can be very generative. On the other hand, some of the largest online games that have ever taken place are war games between Korean citizens and Chinese citizens who tool up and do 3-month-long campaigns against each other with hyper-nationalist rhetoric. It's a bit of a balance. I think you got to win and a lose on that one, mate.
Thanks for lobbing that question in there. Thanks, Zeb, for now. We're into the final furlong. We've asked you, all of you guys on the panel, to consider a couple of things, 2 or 3 things that could be crucial in shaping a decent economic future for us all. So, Linda, I'm going to let you go first on this. And we won't talk about what we'll avoid yet, but tell us what we could go for.
And I think we need to think about reforming the economic system to be more inclusive, more sustainable in all the ways that we've described, and to come up with big new ideas for it. Because I think, with the crisis and the pandemic and everything that we've gone through, I think the direction of travel is now clearer, and we need to capitalize on that. And the way to do it is to have concrete suggestions. And I guess I usually say this to anyone in a lecture anyways, there are no dumb questions. If you're thinking it, articulate it, look into it, try to come up with new ideas, because that's what change is about, considering new ideas and making a contribution.
And very briefly, what should we avoid, Linda?
I think we should avoid despondency. So one of the big lessons from history is that people have come through such things, and indeed worse. So, don't be discouraged. It may take time to come up with this new consensus, but history tells us that big transformations can happen. You just have to keep engaging and keep persevering.
Nil desperandum. Okay, Mark, 2 or 3 points, and then what to avoid.
So first of all, go out and buy Angrynomics, because all the answers are in the back of the book.
This is tragic, but anyway.
All right, it is. So there's 4 things in the back. One we've spoken about, which is Citizens' Wealth Fund. Another one is a digital dividend. So just very quickly think about this. Why is Facebook so profitable? Because you sit in front of a computer and dump all your data into it, and you refresh that every time that you go on. Why are we giving a property right away for free? Surely we should be licensing that to these tech companies and getting some of the money back. Another one, pretty technical and geeky, the ECB's on it, nobody else seems to be doing it, dual interest rates. If you want to get to a carbon efficient future, why not give lending funds at -4 and then give borrowing funds at +4? The central bank takes a hit in its balance sheet, but this way actually generates real assets. And that way in the future, it actually is able to basically pay that back and make it whole. And finally, one we're doing already, stop farting around recessions, just basically pay people $1,000 a month until the recession's over. Forget quantitative easing and all that fancy nonsense. It just makes the rich richer. And then when it's done, stop, and everybody wins. So there you go. So on the back of the book, Angrynomics, it's awesome.
And very briefly, what to avoid then? What are you saying?
Timidity. Political timidity. We cannot afford to be cowards about this.
We cannot accuse you of timidity, Mark. But Andrew, I want you to whiz through yours, please.
Well, much of which we've already rehearsed, but definitely I would say we need to invest for the transition, for the sort of country we want to be, economy we want to be, but to help people get from A to B. We forgot that through many of the transitions that have taken place in history. I grew up in Lanarkshire, and we absolutely let folk down as industries declined there. Don't repeat that mistake. I think encourage bridges, not walls, if you like, to use that phrase. We need to be open, trading, part of the European community, part of the world community. Don't be despondent about multilateral institutions, rebuild better ones. If the G20 is now the G0, if the WTO is done, we need more to cooperate across borders, definitely. And get back into the European Union, that would be fine also. Avoid inflation, avoid doing what we did yesterday, avoid short-termism, avoid Pied Pipers pretending that everything's going to be easy and free, and above all else, avoid austerity, because it won't work right now, or indeed ever.
Okay, and very, very quickly, probably in a couple of words each. Linda first, reasons to be cheerful.
And people in history have come through this before, so we can take heart and pursue a new consensus together.
Sounds good to me. Mark?
Society advances one funeral at a time. Thanks, boomers.
Andrew?
You'll be staying in Rhode Island for some time. The reason to be cheerful is we went into the crisis richer than ever before, with more educated people in the world than ever before, with less poverty in the world than ever before, and less conflict. And the other big reason is looking at the coming generation. Despite how we're letting them down, they're healthier, they're better educated, they're better people than ours.
Well, you've been fantastic and insightful. Linda, Andrew, Mark, it was wonderful talking to you. I think this has definitely been a conversation worth having, likely to go on for some time offline too. We appreciate your time. We hope you had some fun too. The conversation continues digitally at least. You'll be able to relive this entire experience on YouTube very soon. Keep your eyes peeled on social media. As for the next conversation worth having, watch this space. But before they are released into the community after digital lockdown, I'd like to point you in the direction of some very decent reading. Mark Blyth with Eric Lonergan has a very punchy, he never mentioned this, and highly entertaining book out called Angronomics, available in all good bookshops as well as online. Linda Yueh's wonderful, timely book, The Great Economist, is out now, very highly readable, pitch perfect perspective from the past on the current mess. And finally, Andrew Wilson has no book out yet. We'll see. But you may want to see where his thoughts take him as the author of the Sustainable Growth Commission established by the First Minister. You just go to sustainablegrowthcommission.scot if you want to check that out in more detail. And why would you not? For now, though, from everyone on the TEDx Conversations Worth Having team, especially this baby boomer, thanks to the panel and, of course, to you for sitting in on the chat online. I've learned a lot over the last hour, and I hope we've given you some food for thought and some fresh ideas, maybe even some optimism. Things can get better. If you want to watch this video again, we'll be on TEDx website next week. For now, though, stay safe, and thanks very much for your time.